know you helped me with it the one time I used it.
Good job. Let's go to. I think that's, we're recording.
Okay. It's 4 o'clock, so we'll call the Community Development Revolving Loan Fund Committee to order. First thing will be roll call, and I'll handle that. Gary Delbo here, Matt Schuler
Here.
and Mike Borlick.
Here.
We have a quorum. Okay, first thing, a couple things on the agenda. Approval of our last meeting, which was January 12th, 2016.
Motion to approve. Second.
Motion and a second to approve the minutes from the January 12th meeting. All in favor, saying aye.
Aye.
So carried. The next thing is review status of outstanding loans. You gonna give us an update on the ones
Yes, I'm
that?
gonna give you a quick update here. We had, one of our loans had held on 1 month. I did reach out to them, and evidently, once a year, they have to fill out a new banking lender agreement that says to have auto draft done throughout the year. And so they filled that out, and it'll be auto drafted and corrected. So that just happened to be just an oversight.
Okay.
And so it'll, not by any other means, it was just a
Yeah, because they've been
paperwork.
very regular.
What?
Yes.
They've been very regular.
That has
for
not been a
years.
previous
Okay.
issue, and I don't expect it to be. This was just one of those, I just called and asked if they would contact their lender to find out what the hangup was, and he said I gotta sign a piece of paper and just agree to another year of having it
Okay.
done. So
Good.
that was a formality, but
Oh.
everything else is just fine.
Correct. But the bottom figure is what's available.
That's correct.
Very good. Any other questions or comments in regard to our loan status
We
report?
had one that's now done.
Yeah,
It showed up on here, so that's great.
Yep.
yeah. We're
That's
doing very well.
Get us
Yes,
more funds to move forward.
We need-
So that'd be
we
great.
need those funds working. Excellent job. We'll place on file unless there's any other comments. All right, we'll place the latest loan status report on file. Thank you. We have one review today. Hero Cleaning Property Restoration LLC. So you want to give us,
Yeah.
great information, but why don't you recap it as well?
Make a quick introduction.
Yes.
So this is the Mazzolina family. This is Mark and his brother,
All work.
Paul
Okay.
and Mark. So Mark has been the owner of Pure Clean. It opened its doors in about 2008. A business that specializes in providing emergency services to residential and commercial properties which have been damaged by fire, water and smoke, and mold and biohazard waste. His business was a home-based business that quickly grew, and by the start of 2009 needed to move into an office, warehouse space, along with the addition of an employee. Around 2011, he brought another move in a workforce of about 8.5 full-time employees. But during the last 2 years, Mr. Mazzolini has developed and expanded his business services offering to include contents of a cleaning division, a service that removes damaged items, cleans and stores the items until the contents can be returned to the rebuilt or cleaned location, which he's experiencing some rapid growth with that division, and needs the additional warehouse space and room for his anticipated new 12 employees. So the staff has,
Good.
I think we have to have it open.
Yeah.
All right.
We do.
All right, fine.
So I can, maybe you want to let them know we're in session or something? Or that we're just having a- Okay, no worries. There's not much to observe when I was around here, other than the carpeting on the bottom of the floor. But for the most part, we've gathered all of their financial information. They've met all the criteria, as you see in your packets. They are looking to purchase the property at 1364 Reber Street to expand their business. They're currently at a location in Ashwaubenon and are growing that and would like to put everything consolidated under a location there. And they will be doing enhancements to the building and working out of a Green Bay location. So that's where the revolving loan would come in. We would actually work with them on the property acquisition. Their lender is Nicolay Bank. I've been working with Nicolay. So it's going to be land and property acquisition. It's
Okay.
pretty straightforward. It fits into the criteria of our loan. The lender is excited to be working with the city and is very supportive of the loan. So just in the underwriting and the feedback that I've gotten from Nicolay, including our board member here, is supportive of the transaction.
Okay.
Motion to suspend the rules.
Second.
Motion second, suspend the rules, and the meeting is open to public comment. All in favor, signify by saying aye.
Aye.
The meeting is open? Great, we'll be asking you some questions directly then. But maybe when you could,
Yep, I'll help along the way.
Typically, equipment is all we have for collateral. In this case, we're buying a building. I presume we're gonna have a second position in the building, or how's that gonna work? What's the collateral?
Yep. So we're actually going to do a second position, just because that's typically our loan position.
Right,
So we will be taking a second, and Nicolay will be in first. But pretty much the property, the cost of the property is going to support the whole loan. It's favorable with our interest rate and our employment for the amount of employees
Right,
we're bringing on.
right.
And so that formulates out to work for the 125.
And what Mike was right asking the question, but I think you can answer it. I mean, our job is gap financing, so in other words, without us, this project, the building wouldn't happen?
That's right,
Okay.
because because they're also going to do build out and other, they're going to do other activities
Okay.
with some of the other loan funds that are available. If you see in your distribution
sir.
portion of the,
Should be in here.
Yeah.
there's a
I got it.
table that has uses and, okay,
Yeah, well,
That's okay.
what they're gonna do with their plan and stuff.
right.
Right,
I got
right.
that.
Yep, we got that. Okay.
Some of the,
Some of these questions, we just have to ask.
no, you can ask me whatever you'd like to.
Okay.
That's great. I want to make sure that you're very clear on making a great decision.
Great.
So that's a good question. A lot of times there are additional strings attached with lending to construction and things like that, and not that we discourage that at all, but sometimes it's easier for the bank funds or the SBA loan or whatever is the other lending package to cover some of those, so that they don't have to do they would like to do a lot of the work themselves, and since they're in the restoration business, would like to
Right,
restore the
right.
building and bring it to their, so we wouldn't have to worry about the Davis-Bacon rules on that particular scenario, or, so that's why the property acquisition was the item of choice in this particular loan situation. But that still will meet the employee criteria. But on property, we don't have to worry about.
You have the recommended terms, we're getting ahead of ourselves, you get me hanging it out later?
While she's looking, can I have a question?
Yes, please, lots of questions.
Hi,
Go ahead.
guys.
Given,
I just had a couple questions. It looks like of the 250,000 of the project, it's like the city's participating in 50%, and you and Nicolay together are participating in the other 50%. Does that, any of these funds go towards restructuring this debt here? Or is this a separate, the existing debt?
That's separate.
That's, because you look at about $47.50 a month in those payments, and then you look at, I mean, I guess I just had a question, is it the debt service there, everybody comfortable with that?
Yeah, if you look on the financials and on the income statement, at the bottom of the income statement, I forecasted the EBTA,
Okay.
which is the cash flow.
Oh, okay.
And so for 16, it's about just under 70,000. And then it ramps up to 143 and 160 on that projection. So are you familiar with the the EBTA, earnings before
Yeah, I
increase
just
tax
wanna-
depreciation
I don't
amortization.
think I have.
That was on
I
the
have
3-year projection.
I'm not sure that we have that.
Yeah.
Because I've.
Oh,
I
wait a minute,
see-
are you talking on the cash flow analysis?
Well, it's,
What sheet do you have?
That's
Sorry about that,
historical.
guys.
this is what I sent on over, a
Yeah.
3-year projection.
Okay.
15,
Oh,
16,
yeah, okay.
or 16, 17, 18, and go to the second of the 2 pages for the income statement.
That's why I asked that. We don't have that. Anyway.
And then it shows the cash
We'll
flow,
take a peek.
which is
Yeah, we'll take a
EBTA. So there's the net income, 7,000, but then you add back your interest and depreciation
okay.
for 69.
So your cash flow.
Yeah, and then it ramps up significantly after.
And this number is gonna take care of.
Yes, all
So
the.
this is in here already?
Yes, all the
All right.
debt is in there.
All right, got you. All right. Got her.
If you could just, I'd love to get those figures here. I think you've got 3 future years going forward.
Somebody make a copy and get this to you.
Yeah, I don't think we
Oh, I don't,
have.
I just looked at his, I don't need,
future
because once we
income
make a
statement.
decision, you're gonna have them back to shreds, I don't need
Do
them.
you want me to just quick?
Well, I have all kinds of handwritten notes on it.
Okay, let me just do at the top of the page, looks like I'll pull it out of my paper. Is it the one that has estimate?
I mean,
Pure clean restoration income statement projection.
Yeah, see,
Before
that's-
period ended, and then there's 3 columns.
Let me just, I'll give it right back to you.
I just didn't.
because we had the, we got, well,
We have
you know, we had the
historical.
historical.
We have historical,
Sure,
but
that's
not
in my-
going forward.
You want me to go make copies really quick?
I don't,
They don't
need-
leave
I
this
just,
room. They
I don't really
the
need
copies
it,
will not leave this
Julie,
room.
because he answered my question with looking at that number.
Sure.
Let me
Okay.
just look and see
So-
real quick here and see if I have.
I was just concerned about a little bit
Yeah.
about this.
Yeah, sure.
Yeah,
Because some of
existing
that, I
debt
don't know.
plus new debt
You
is
know,
all built
you
into that.
You and I both know that 14% and 10% is like,
I think I only sent out balance sheet information, I must have
Yep.
forgot to print that off, I apologize.
Yeah, I don't think
On
we've
the
got
income
future
statements.
income
No,
statements.
no, you don't.
Mr. Chair, if the rest of the committee wants to take a peek, I don't personally need a
One for
copy.
me as well, thank you.
Yep.
And I'll give them back his other notes.
And it looks like, hey, roughly the rents you're paying now are in the 25 to 30,000 a year.
Right now, it's, well, we actually, it's just over, it's like 22.
But it's going up.
Yeah, but
But it's
we're
going up.
at the end of this
April.
month.
Yeah,
End
well,
of
then-
April is our renewal and.
Instead of rent, you're owning it.
Right.
So
Slightly more
again, in
cash
that,
outlay, but we build in equity.
in that,
And
and that
that's
rent
all
is
in here.
included in there,
It's
so
all
that'll.
included, and
that'll go
as are
towards
the real estate
debt
taxes,
re-
as
yeah.
are the increase in insurance and
Right.
utilities.
And assuming there's increasing revenue
Yes.
on future years, what's going to drive that?
It's more driven by, we've made I made a business decision 2 years ago in our fire division. What we do is when a residence or commercial structure has fire damage, our expertise is to go in and inventory all the items, either restorable or total loss. And then on the restorables, we bring them back to our shop and we clean them. And then typically, the average rebuild on a home is 3 months.
Okay.
So then we have to house those
Yep.
in a secure environment. And I've invested a good amount of money over the last year in training and personnel in that facet of the business, and I believe it's an area that we can really capitalize on the market, because there is no one that in this area that has the certification and the training and the equipment that we have.
Okay.
So I'm out, actually, that's one of my
Sure.
parts, is to sell that
Thank you.
to adjusters
Right.
and decision makers.
Right. How far out, you must be going pretty far out as far as your service territory, you must go northeast Wisconsin, or how far?
Well, like for water, it's 60 miles, because most insurance carriers that we service, excuse me, they demand that you have a 2-hour on-site arrival
Okay.
from the time they call.
Okay.
So our normal hours are 7:45 to 4:30. So when my technicians go home and then we get a call, you know, it's like they get an hour to get there and depart the facility and then go an hour any
Okay.
which way.
Okay, I see.
So we cover like on the Lake Shore Sheboygan, we go all the way up through Door County. We go Marinette, Menominee, west to Wittenberg, and then we only go south as far as Wrightstown.
Oh, okay.
Because we are a franchise, and there is a franchise in the Fox River Valley that has that area. But it should be noted, if we get a call, that doesn't prohibit us from going into the valley. It's just we cannot actively market in their area.
Oh, all right. I understand.
And do you have relevant competitors for
Oh,
this
God,
services
yes.
area?
A lot of them.
There's a lot of, it's a good business,
Okay,
you know.
Very competitive though.
so there's a lot of competitors.
Mhm.
What makes you think you capture that revenue instead of them?
Well, I think when you look at the growth trend of our business,
Right.
I mean, we have done that, and remember, we are a franchise, so what we have been, as our business has grown, we've been actively applying to what are called third-party vendor programs. These are these are companies that go to, let's say, an American Family Insurance and say, we would like to handle all of your claims, and we have a certified group of contractors that will service your losses. So basically, when I was first started this, it was when I tried to get on third-party vendor programs, it was more or less, come back when you grow up. And now, as we've gained traction, because what we did initially was we agent market very hard. So I have a salesperson in my office that every 4 to 5 weeks is in 276 different insurance agencies in the areas that I just described, going out and building relationships with insurance agents. And there are many insurance agents that still make the call when one of their policy holders, let's say, has water in the basement. They call the agent and go, what do we do? So there are still many agents that will say, based on relationships they have with companies like us, call PuroClaim. They'll take good care of you.
Right.
And then when you're out on those calls, you eventually deal with the adjusters for those companies. And the,
Third-party vendors.
well, no, I mean, initially, you're like, I'll give you an example, like American Family Insurance.
Right.
There is the premier third-party vendor program called Contractors Connection. And we've done a good amount of work for American Family, and I've got to know their adjusters pretty well. And they are now supporting our application to
Okay.
Contractors Connection, because Contractors Connection handles the majority of their claims for them. So that's what we've done as we have become more competent and have grown our business. We are getting on these third-party vendor programs.
Okay.
And, that's beautiful,
Yes.
because
Yes.
they just call you and here's a claim.
Right.
Your
Because-
objective there is, right, be the first call.
Pardon?
Be the first call is your
Yes.
objective there. Okay.
Yes.
Mark, in 6 years, you went from 50,000 in revenue to $1 million.
Mhm.
Okay. That's pretty good.
That's pretty good.
Well, it's been a lot of hard work, and it's
Yeah.
been a growth of the business at different segments. I mean.
Yeah, it looks
what-
like you split it up when I was reading through how you did it, and then experiencing a water flood of my own, my family and I.
Oh,
It's
you
like,
know that.
it's like, yeah, what do you do with all of the wet stuff?
Yeah, I mean,
And
there's
that's a good advantage. I can see that from a cleanup standpoint. Not just going in and putting the dehumidifiers and ripping up the carpeting, but then document it, package it, bring it, clean it. And the homeowner, all they have to worry about is when it comes back, it's all done.
absolutely.
You
And
don't have
that's,
soggy boxes. You don't
that's
have
where,
this.
believe it or not, no one has really captured this market well in that area. When you have, we're doing a job, I just came off it, I actually told my brother Paul, I hope I don't smell like fire. Because I got out of my clothes and I was coming in, but this house had a fire in Ashwaubenon on Sunday night. And as you can imagine, to extinguish a fire, you put a lot of water on it. So everything goes top down and their basement is just flooded. So today, we were in there extracting all the water out and starting to categorize things as salvageable versus non-salvageable. Because we capture all that on a computer program, and that's what the sophistication that insurance companies are looking for.
Sure.
Because what we're trying to do is to close that claim as quickly as they can so they can move on to the next claim and satisfy their policyholder.
Right, sure. Well,
And that's where, when you talk about the building, that's the main part of our growth has been our fire division. When you capture these pack-outs, I mean, you think about it, you're going in and taking every article that someone has in their home, and you are inventorying it, you're cleaning it, you're storing it.
wow.
And, you know, I started this out of my home. I had a 3-stall garage, and I put in a garage heater, and we started in the 3rd. Then after 14 months, we went to a small shop in Ashwaubenon with like a 100-square-foot office and a 1,250-square warehouse. And then from there, we went into the building we're in now, which was about 3,500 square feet. And then the adjacent baby came open, so we rented that and went to 5,000 square feet. But even with that, and that has 20-foot ceilings, and we have storage vaults in them that we store the contents in.
Right.
And we have a forklift that we put them on top to maximize our space. But
Right.
there have been times over the last 6 months, I was almost nervous if I got a job, because what I would have to literally do is go out and rent space, and that it's not cost effective, because then we're going to the home, packing everything out, transporting it to a facility.
Yes.
And then, once we're ready for it, go, you know, position it in our storage trucks, deliver it to our shop,
Right.
clean it, and then store it somewhere else. So we've just run out of space.
And then you do get paid for storage. And of course, if you're purchasing third-party storage, that revenue goes right out the door, because you're paying dollar for dollar what you're making.
Insurance companies pay you between 90 cents and $1.28 a square foot for
Storage.
climate-controlled storage. So basically, when we bring the stuff in and clean it, we have, in this building that we're gonna purchase, it's a tremendous layout, and it fits us to a T. We're gonna have a dirty warehouse and a clean warehouse.
Oh, perfect.
That we're able to bring it in when because you bring in fire contaminated contents, they have a tremendous odor to them. So you clean them, you deodorize them, and then you store them, but you can't store them in the same part of your building that has the pungent odor of smoke on it.
I have a question on your franchise.
Yeah, go ahead, I'll ask it. Go ahead.
Just a quick, on your asset, the franchise fee, as revenue goes, how does that work? I mean, are you liable for an increase in franchise? Is it just?
No.
No, you bought it, you own a
Yes.
franchise, there's no percentage monthly. And then the storage side of your business that you're growing and cleaning, that's, I won't say separate of ProClean, but our Pure Clean.
No, that's part.
That's part of there too, but
Yeah.
there's no increase in your cost.
No, I have a
Purchase
certain
franchise fee.
negotiated
All right.
percentage that we
Gotcha.
pay on a monthly basis to Puro Systems.
Oh, okay,
Okay,
okay.
but that cannot go up from them, no.
Okay, okay.
Got her. All right, I'm done. Sorry.
We're just
Great,
like,
great.
if you were to see a ServPro, a Service Master, we're the same thing, except we're not. I think a ServPro has 1,500 franchises across the US. We have 350.
Okay.
It's just it's a competitor of ours, but
Right.
when I was looking at this business model, I was told that if I could capture 1% of my market, I'd be doing very well.
Mm-hmm.
And I believe we probably have surpassed that.
Sounds like it.
So when you're looking at only 1% of the market you're in.
Wow. Wow. Are they adding much value, and now that you've had the franchise for a while, are they actually doing much for you at this point in time?
Well, they are, I mean, they are active, they have a division that goes out, like I said, like these third-party vendors.
Yes.
There are certain insurance companies like Liberty Mutual Insurance. They handle everything themselves. They don't farm it out. So we just got on, Puro Systems got on the Liberty Mutual
Okay.
vendor program last May.
All right.
So we're now actively receiving claims
Okay.
from Liberty
Sure.
Mutual.
Sure.
So they're constantly out approaching insurance carriers, because that's the trend in our industry. Carriers are looking for contractors like myself that have made the financial investment in their business, run it in a professional manner, and can provide the service that a policyholder would be very, very happy with, which again, puts that insurance carrier on a pedestal, helps them satisfy their claims and sell additional policies.
Sure, sure.
So servicing their policyholders is very important.
I'm done.
Okay, if you feel it's necessary, we can go in closed session. Well, first of all, when you want to propose to us or give us sheets on the terms?
Motion to return to regular order.
Second.
Okay, motion to term regular, all the first thing was saying aye.
Yeah, the terms are.
So carried, we are regular order business.
All right. you're
Okay,
right.
good, yes, good.
So we're in second position on the real estate with Nicolay Bank. The terms are at a 4% interest rate. We are no more than 50% in the business transaction, in the total transaction, with the 15 years on the real estate.
15 years in real estate?
Motion to approve based on staff recommendation.
Second.
Okay, there's a motion and a second to approve the loan as specified by staff. All in favor, signify by saying aye.
Aye.
So carried.
It's a
Congratulations.
great building too. I mean, it really
Sounds like
is.
it.
You should take a ride by it sometime, 1364 Reaver.
Was that McDonald?
No, it was a Hireman Business.
Oh, Hireman Business. Okay.
Machines or something, but the way it's laid out, it's gonna be wonderful the way we're gonna be able to operate in it.
That's good.
You know, we have the 20-foot ceilings currently, and this, we won't be able to stack our vaults, but there's, what is it, 12,500 square foot?
Yeah, 9,500 a warehouse.
Oh, wow.
So that gives us
We have
great separation.
3,500 right now, so.
Gives us great separation for exactly how he described of the cleaning, and then once it's clean, the storage.
Good. Motion to adjourn.
Motion and a second to adjourn.
Second.
All in favor, signify by saying aye. We are adjourned. Thank you. Excellent
gentlemen.
job, guys.
Good luck,
Congratulations.
man. Good luck.
It's neat.
Do
You
I
guys
just
didn't play hockey, did you?
Yeah.